What's going on, y'all? It's your boy 100SPX with a quick back testing session. It's not going to take too long. I just wanted to show people how I use the OTE fib and kind of show my settings, because I didn't show them on the previous video. If you caught my other video, my first video that I ever posted on this channel. This is really my second video, by the way. Go ahead and screenshot this, because this is what I use on the daily. Typically the 0.79 specifically and the 618 are going to be the key zones, and then these are standard deviations, -2, -2.5 and all that, which we can get into in another video. But this one is going to be about the OTE optimal entry fib that I use, and man, I get the best entries with this tool. So this was market open dump today, July 10th, Thursday. I'm on LA Pacific time, so 6:30 in the morning was market open. Boom, quickly dumped. Didn't catch nothing in the morning because this was just an impulsive move down, like no real entry. I know there's some, like, all right, so I could go over the CISD strategy. You could have entered here technically. You just gotta be on. You just gotta like know what you're looking for. Let me close this off for a little minute real quick. Let's say the market open 6:30. Boom, quick dump. Honestly I wasn't even on the charts at market open, because I don't really trade the market open all the time. I just wait and let price settle, do its thing. But this morning I didn't even hop on the charts till the candles were already till this was already on the chart. And I was making my coffee and shit like that. But if I was more attentive, and like let's say I'm up 6 a.m. and I'm already studying the charts and I'm looking at price action, high chances I would have caught this, because this is a change in the state of delivery, and this is a strategy that I also follow aside from the OTE strategy. When price closes below this bullish leg right here, this being the last candle, you see price close under this candle, and then all this is like basically like a retest of that zone, as you can see. Sometimes I do like to wait. Obviously, like there's fair value gaps here. So typically, like when I get a change in state of delivery, I like to wait for price to retest, and I'll enter here usually. But as you can see, price struggled to get up here, which is a bearish signature. I feel like when price isn't able to retest bearish PD arrays, to me that's actually a bearish or bullish signature, depending on what side you play it. When it doesn't have to retest, and then it never really did. That's the crazy part. It never really retested that. So it's something you might want to look at, because price, oh actually it did, and that's where I entered my trade. All right, so this is what I mean by being patient. I waited all day for this to get tested, and I'm gonna get into that in a bit. But this is kind of like just a review of the day for today, Thursday, July 10th. This would have been a clutch entry. Obviously, in hindsight, this is hindsight trading. But that is a strategy, and I'll go into that. This is a change in state delivery when price closes below the previous bullish leg. Typically, you do want it coming out of some sort of fair value gap, mainly the 15-minute. If you're trading on the 1 minute, that's and there's a BPR over here. If you didn't know, there's a BPR is basically like an inverted fair value gap area, and it's short for balanced price range. That's actually beautiful. So this is the 15-minute. The 15-minute and the 1 minute are alignment. This is a time alignment. The 1 hour and the 5 minute, I usually do the 15-minute to the 1 minute. So anytime I see a 15-minute fair value gap or inverted fair value gap / BPR, that's a good zone to really catch these change in the state of deliveries. So now that I have that marked out, this is the BPR, 15-minute BPR, which I didn't have marked out, which is another reason why I couldn't see this through. But let's say I was more prepared, I would have caught this if I was on my toes. I wasn't really on my toes. I'm gonna admit I was just kind of lax this morning. So I didn't catch this, and that's what happens. Typically I would catch something like this on, I just didn't, market just opened, I don't even, literally 6:30, next minute, literally within 2-3 minutes we got to change the state of delivery. I don't like to even trade that early, because if you know, as a trader, price is very up and down, volatile in the morning, and I'm sure the momentum of these candles are going to psych you out. It's going to scare you. It's not going to give you that full confidence as it would during the macro, which is like a 7 a.m. depending what type of time you're on. EST is 10 a.m. But typically you want price to settle around that time, which is when you get you get reversals around that time. And look what happens. If you were just patient and you keep that in mind, the 7 o'clock macro, we get a reversal. You can almost, now it's hard to say, oh yeah, 7:01 on the dot, this is the reversal and you're gonna take this. Not really. You want to see where this is bouncing off of. So if you zoom out, let me see what's back here. So when you zoom out, and I'm just gonna mark out these lows. We did sweep. All right. So what's over here, and what do we have? So I'm looking over here, and then I'm looking over here, and I'm just shading it out without really knowing what's there yet. And this is why sometimes it's so hard to catch the bottom, because you don't know where it's gonna land, you don't know why it's reversing. And look, I bet if I go to a 5-minute time frame, this is probably a 5-minute fair value gap, because these are all 1-minute FVGs. So I can see why, and it swept these lows. So a lot of liquidity was swept with this candle. So let's mark this out. Price really swept all that. Everything, all this was swept. This is internal liquidity, boom, 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 swept all that. And that's when you can see why price rallied all the way up the way it did. However, I'm not gonna lie, I scalped this bottom just a little bit. I didn't do it because of this. I was eyeballing the momentum. I'm a price action trader as well. There was no real strategy. I was just trying to time the bottom. I caught this to this, and then once I seen, so this is another thing, inversion fair value gaps right here. This is the IFEG. I wouldn't advise this at all, because I got in before the IFEG. I just seen this, and all right, so this is a lot to process for you guys, because I don't want to throw too much at you. But this was another reason why I got in, actually, because a lot goes in through my mind. You gotta think fast in these markets, to be honest. All right, so this wick, this is what I like to do. I like to wait and see how price reacts to the consequent encroachment, aka rejection block. Because look at this wick. If you draw the box from the body to the bottom of the wick, this halfway mark is a rejection block if respected. Price, the second candle, has to have the 50% consequent encroachment, the CE/rejection block, in order for it to continue upward. That's a sign. That's a secret sauce right there that I just recently learned. I'm not gonna lie. I learned that not too long ago. This is where I got in at. Obviously I had to wait, and I wish I literally, like, I think my entry was at the bottom of this wick, if I had the screenshot of it, because I waited for this confirmation. And that's the crazy part. I don't know if a lot of you guys know about this stuff, but this is called a rejection block. And I'm gonna type that in right here. So I'm gonna just leave that right there. Alright, so this is a rejection block. And then look, it almost acts as a fair value gap. Because then look, when it came down here, it respected it again. So you had another opportunity to get in right here. And this is the crazy part, because I can already see this is an OTE entry. Whenever you see price go up and pull back, it usually bounces off the OTE. If it doesn't, then we're just going to continue. It's a continuation lower. And sometimes I'll even use that as a strategy, is if it breaks through the OTE, I'll sell or buy, depending. So watch, I can eyeball this and I can tell, obviously, from this wick to this, not a perfect one, but it's just the range, this area, which is why I wouldn't really take this as an OTE strategy. I would take this off a rejection block strategy, to be honest. I don't know if you guys know Powell trades. This is what he teaches, rejection blocks. I'm not in his mentorship. I just I'm in the trading community. I know and I heard and I follow him, and he openly talks about rejection blocks. But they act as fair value gaps if you know what you're doing. Obviously this is not a rejection block, because look at what price continued to break through. All these, just because you see a wick, it doesn't mean it's a rejection block. Look at this wick. This, I ain't gonna lie, this was probably a tricky one. And this is, but the thing I like about it is you can shoot your shot on these, because you just set your stop loss at the bottom of this wick. So it's like a high and low risk to reward. High reward, low risk, high reward. Because technically this did, the thing is that the thing you want to wait for though is, alright, so I know it looks weird because my candles are black and white and clear and shit, but the black candles are red, obviously. So another confirmation is the next candle has to close bullish, or whichever way, the direction that you're going, because this can work in a bearish situation as well. But look at this candle closed bearish. So technically this would not be a good sign of a rejection block. Usually you want to see a push out of this. The rejection block has to close, the next candle from the wick has to close in your direction, not bearish, because then look, that's another bearish candle. This is as bearish candle as it gets. Try to go up, got pushed down. Even more confirmation this wasn't gonna work, because once price closes under that 50% consequent encroachment, you're cooked, and it's not a rejection block. This is a rejection block, because this closed bullish. This is a bullish candle. That's when you don't have, this is considered bottom ticking, top ticking. This is literally Powell's strategy, and I didn't plan on going over this, but since we're on the topic, you don't have to enter on this. Yeah, you can gamble and like get in at the bottom of this candle, but you don't know the outcome of this candle. It's like I said, it's easy to look at in hindsight, but these candles are moving fast. There was a lot of momentum at this time, a lot of volume. You're really gambling if you try to just enter on this candle, because you don't know if it's going to keep going down. Disrespect this wick. So the fact that it respected it, it closed bullish, then you want to get in. And also this is the 1 minute time frame. You can get a feel for price action when a candle is being pushed up. You can feel the momentum. Look, this is a very bullish candle. But so is this. But like I said, you want to wait for the confirmation. This price action just felt bearish still. It tried and it got rejected and rejected and rejected, and boom, look at these big candles. This was almost 50. This was like a 60-point drop from that bullish candle. So point is, you want to wait for a confirmation and then you can enter. You don't have to literally try to, because you're gambling. I've got cooked trying to catch wicks like this. That's the part of rejection blocks. You got to have a tight stop, which that's what I like about it. Because look, ideally your stop is the bottom of that wick, because soon as price falls through that, is the play is it's not validated. It's invalid. And let's say, what's this? Is this a 9R? I think it's a 9R just because of how low your stop is. But I would say typically you want to go for maybe like a honestly something light. Probably aim for this high. But my added confirmation, and obviously like I really want to get into, was this IFEG. This is one of the strategies that I've learned as well. So you want to have added confluence. Let me put this more towards the center, or the left actually. Whatever, I guess. That's bothering me though. I guess. Alright, so this is an IFEG, inverse fair value gap. Once price, I was already in, I'm not gonna lie, I got in like right in this little area once I seen this rejection block. And then I was already in with like 15 contracts, I'm not gonna lie, 15 micros. So I was banking on this to get inverted. I got in like around here. But I know some people don't get in until they close. You want to get in at the close of this candle. So as soon as price closes, and some people just going off momentum, and then obviously anything coming back below, you want to have your stops right there, because price shouldn't, it could retest, but price shouldn't fall back through. That's a bearish signature. You don't even, honestly, that's why today's price action was kind of tough, trying to catch the bottom, because there's still a lot of bearish momentum pushing against you. Even when you're trying to catch a reversal, look at this. This was like almost, what, 200 points almost? You're fighting a huge trend. So it's hard to catch these reversals. I honestly don't even recommend trying to catch these reversals when price is this volatile. But one of the confirmations, you can get a good trade in if you find these little bullish signatures where price is trying to reverse. The first thing you're going to want to look for is inverse fair value gap. As soon as you see a fair value gap, as soon as price inverses that, you're going to catch something, a decent RR. This is a 4 RR. I think I made about 500 just scalping from here to here, and I was really just shooting for this because I just felt sketched out with this price action, how bearish it was. I like to play it safe, especially when I have a lot of risk. 15 micros is, to me, considered a lot of risk, especially when you're trading on a 50K account. You don't have that much drawdown, and risk management is key with these prop firms. That's how you stay alive, folks. Stay alive to trade another day. So I was really just going for this, and I got out. Honestly, I probably even got out like right here. I'm just the type, like, soon as I see price struggling, I'm out, depending on the risk. If I have little risk, like let's say 3 to 5 micros, I would have probably held this longer. But then look at this, would have got me right back to where I exited. I wasn't expecting price to just pump all the way, which it does sometimes, you just never know. But that's the thing, you never know. Secure your profits, people. Especially, I think, who am I trading with? The account I got, I think it's Bullinox. They have an intraday trailing drawdown. I don't want to see no pullbacks. If I see pullbacks, that's taken away from my drawdown. And so I don't like none of that. So if anything, I could have re-entered on this rejection block. I didn't. That was probably even the best bet, because look, price went up. This was 70 points. That's a good one. Another IFEG right here. That would have been another trade. Patience, though. A lot of patience is what it takes. But yeah, there was pretty much, you can call this chop really a wide range chop. indecisive chop, trying to catch a reversal. And it's hard picking this. Like, yeah, it's easy to say, oh, you could go off this rejection block. But when live price action is happening, look at these bearish candles, huge engulfing bearish candles. You're not going to want to just catch this, like, you know what I mean? This looks frail. This looks like it could easily get broken down and continue to go down. And honestly, that was on the back of my mind. Obviously, I'm gonna consider that, but didn't. And then that inversion would have been confirmation to go back up. Boom, take out these highs, and yeah, like, just, that's, to me, that's more of a, I would kind of say it's a scalping strategy, but a very smart strategy as well. So I see price went up, started to kind of turn back down. This would be, I think, did I catch it? I don't know, what time is this? 8 o'clock, probably. But what I do is I'll draw out the OTE, and didn't really even touch the 618, so I probably missed it. I don't like when price doesn't test any of this zone right here, between these two neon lines, and that's why they're neon and pink, you know, bright colors, because this is the hot spot. This is where I scale in, or I'll set my buy or sell limits in these areas. To be honest, regardless if there's a PD array, whether there's a FEG or not, because I've seen price literally reverse off of damn near nothing, even though there was a inverse fair value gap, basically like there's not a BPR, because it's not too. So just to give you guys context, a BPR is a fair value gap and a inversion fair value gap put together. That's like a balanced price range. This isn't considered a BPR, it's just an inverted fair value gap, because there's no fair value gap on this side. But price never came down and tapped that, so I don't take those trades, even though it did rally. Or let's say if I went to the 5 minute, because sometimes I'll switch between the 5 and the 1 just to see more solid structure. See, so I'm like changing time frames, because I lose where I was at. No, that was over here. Yeah, I was right here. See how different this shit looks on the 5 minute. Okay, so this looks a lot different on the 5 minute. Yeah, I wouldn't have cut. There's nothing here I would catch. Yeah, there's a fair value gap, 5 minute fair value gap here. I'm not catching that though. So I didn't really trade this whole little area. But from here is where it gets interesting, because I can eyeball this. Look at that. 0.79 tested. So let me go back to the 1 minute, because let's be honest, most of us trade on the 1 minute. 5 minute is cool. Like I said, I use it to catch like solid structure. But the 1 minute is like the one that you want to sniper entry on. You get the sniper entries. And I believe I did catch this, for being honest, because I went off this base. And if you watch my previous video, I like the base candles, the engulfing bullish or bearish candles, whichever direction you're going. And I'll anchor from that to the swing high and wait, because anytime, all right, so this is something I didn't mention on the previous video. Anytime you see price curl down like this, or sometimes you'll see it like curl up, usually price goes the opposite direction afterwards. So now that it's pulling down, it usually goes back up. Let me take those off. So this alone catches my eye, and I always try to anchor the base of the leg, and I just wait. I'll leave the fib up, or sometimes I'll just mark the zone, and then just delete it so I don't have all these lines. Let me get out of that tool. And yeah, this consolidated a little bit, 1 minute time frame. This is a good sign though. When it consolidates in the OTE fib, then I usually just enter. Sometimes you do want to wait for a little confirmation, like, okay, there's a fib right here. You might want to wait to see how price reacts to this fib. Soon as you see something like this, where it just bull rushes this whole fib and runs through it and then closes through it, boom, catch a little something. And then what does it do? Comes back and retests. This is very bearish price action, because I don't like these engulfing pullbacks, these strong pullbacks. They tend to make you feel like price is going to keep pushing down, because it wanted to. Basically, it's like the bulls were fighting the bears. The bears came out swinging. Every time the bulls gained some momentum, boom, like heavy pullbacks. These are like pretty large candles. And then chop. But look, it never went back under this zone. Like, all you had to do was hold it. And I'm not a big fan of holding chop, but look at this. And then see, if anything, this is why I said I was patient and waited for this. This was, like, to me, my play of the day. Let me kind of clear this up so you can see the candles a little more. I want to leave it up, but just want to get the opacity a little lighter, because it's kind of overpowering the candles. But let me show you why I got in right there. That's, to me, a nice top tick. I have my screenshots on the Instagram. Again, if you want to follow me on Instagram, you can. I post a lot of my trades on there. I literally got in on this wick, this candle. But as soon as I got in, chopped cheese. I was up, like, because I had 11 micros, about 10, 11 micros. This was, for a minute, my highest profit point. I was up like almost $500 off this candle. And I'm thinking, oh yeah, we're going to dump, because that's a bearish candle. Like I said, price was bearish all day. That's why I waited. I wasn't really a big fan of the bullish, because look at how these candles were coming down every time price went up. Price was aggressively pushing down. These are 1 minute candles, mind you. Aggressive back to back to back bullish candles. I'm like, all right, I'm on the bear side. Even when I seen price doing all this. So let me show you how I got into that. And I'm gonna clear up my drawings, remove all drawings, just to, all right. So basically, from the swing high of the day to the swing low of the day, that gives you a context of a pullback zone where price can reject from. And now it took all day, because look, it was almost until 11:30 Pacific time, 11:20, where price finally got to that point. And that's why price was choppy, because typically around that time, this like the last hour of the market, it gets really choppy. But it still respected the OTE fib. Look at this, to the tick, to the tick. Let me zoom in a little more so you can really see. And obviously there's a PD array up here. You do want to, like, when there's a PD array at the OTE, is high chance is gonna respect it. So there's a 5 minute fair value gap that I mentioned from earlier, that price finally went up to retest, and it kept rejecting. So that's why I held on to this, because I'm like, once if I were to see price like this, that's why my trade was the way it was, because I didn't even have a stop loss, to be honest. I think I had a mental stop loss, because it was, actually I did at one point, because my stop loss was above the fair value gap. Obviously plays invalid if price is pushing all the way through, fills it up. Now it can fill the fair value gap and still dump, because it just wants to fill that imbalance, because that's what a fair value gap is. It's an imbalance, price imbalance. So price can fill this up and then still reject. But if it clears it and keeps pushing upwards, just close it out, close the trade. And I was initially pulling, I wanted to get I wanted to take this low out. Let me just put this up real quick. Obviously I was getting edged, which is why sometimes I don't put my TPs right at the bottom, because price isn't always gonna run through and sweep a low, depending on how price action is. Price action is a price action. I always put it like, see, if anything is this, you can almost, I wouldn't say it's a rejection or a rejection block, because it went a little below the halfway point. But I just had to manually close it out because I did have my TP like right. I got edge like right here. To be honest, I was like a couple ticks away, and I just closed it out. It's still decent. I closed out like right. To be honest, let me see. I closed out like probably like right there or something. It wasn't like, you know, but it was still what. What's that? 3R. Cool. I'll take it. I was waiting. I held on to this trade for almost 2 hours. And it finally dumped, because I held it from like, I got in like at 11:20, and it didn't even start dumping until literally 12:50, and that's a crucial time in the power hour. The last 10 minutes it gets really volatile, and it just started shooting down right at that 12:50, 12:45. Fine, that's what I was waiting on the whole time. Because usually when price hits the fib, I want to see a reaction, a bearish or bullish reaction. So I seen this candle, even this candle. As soon as I seen this candle, I'm like, okay, cool, but I didn't enter yet. I didn't enter until literally this candle, because the closer to the 0.79, the better. But there are times where it'll look something like this, where price doesn't always, it's not going to always hit the 0.79, but if it's in this range between the 0.79 and the 0.705, and sometimes even price respects the 618. Like if you look at this candle, you would think, oh, you would want to jump in here. No, that doesn't mean just jump in at 618. You want to wait for confirmation. Always look at this. This is not respecting 6.8, but now it's entering this OTE zone. It's specifically this zone. Literally, what I'll do is, there's times, because I've gotten edged, my buy and sell limits got edged so hard before, where let's say I'll have a sell, let me pull this up and just pretend this was the fib situation. I'll have a sell limit right here and wait for price to get there, and it doesn't get there. So what I do is sometimes I'll just put it in the middle, because there's a higher chance of it tapping into the middle, and I would have got super like top tick entry right there, because price will come up, it'll push up and then tap you in, because those are my favorite plays. I get the top tick, bottom tick entries when I set my buy and sell limits, because when you do market orders, when you just buy the market, sell the market, there's like little slippage sometimes, so you're not gonna get those precise entries like that. But when you set buy and sell limit orders, you get those precise tap-ins. You know, obviously you gotta be know what you're doing, but in this case, price did tap right on the 0.79. So I always keep I usually have it like right before it gets there, to get those super sniper entries. And it took a while. It kept, and this is why I don't even have this is why I can't wait to do a live account, because the market closed, and obviously, as you know, with prop firms, they close out your positions at a certain time. So then there's that break, that hour break, and then it starts a new trading day technically. And this was, I believe, the beginning of Asia, the opening of Asia, right at 5. Look at that, 5 p.m. Dump, crazy dump. But technically, it stayed under that 0.79. It respected this fair value gap, this OTE entry. I could have just got back in off that, but I didn't. I wasn't really on the charts. I don't really trade Asia open that much, but it is something to kind of keep in mind sometimes, because Asia does move pretty well. Sometimes, I honestly, to be honest, I recommend you trade one session only, whether it's New York, London. I wouldn't recommend trading Asia like that. Asia doesn't always hit like that. But when it does, it does. And this is obviously news related. Trump making the market go dump or pump, go crazy. Cause how many points was this? Get this measuring tool. About 200 point drop. And is this live? Yeah. All right. So the market is live right now. So, like I said, the most bullish engulfing candles is what I usually go the base off of. And that, and look, boom, look what price is ranging at right now as we speak. Right at the 0.79. That's why, like, you got to play with this thing, because I always go off the most engulfing. Like, there's a reason why I'm not up here with it, like all the way, like, oh, even though this is the top of the top, for some reason it's always on the, like, the most bullish and bearish where you'll get decent reactions from. So you want to play with it and you'll see for yourself. But let's say I did go from this to this, it is technically respecting the 618. It is technically still in this range, but it's this is the difficulty. It is in this fair value gap. What is this? 5-minute fair value gap. It is sitting right in there, but it's not fully respecting it. Like, it's sitting there. It's not going too much higher. But I don't like trading that because look, it's still kind of pushing. These are 5-minute candles, very low volume, by the way. These are small 5-minute candles. Why would you try to, like, trade this? You don't want to trade this. And it's just, to me, that's bullish when it's just ranging in a fair value gap, because buyers and sellers are liking this area. It's not rejecting, they're just fighting. It's just a little low volume consolidation. Not to get off topic, but I don't really be knowing about buyers and sellers. Sometimes I do feel like a lot of this shit is an algorithm and it is manipulated, because why is it right at 5 p.m. market just starts dumping? And that's happened previous times where I don't feel like sellers are literally just dumping their portfolios. I feel like if you follow ICT, he does talk big about there being an algorithm, which kind of makes sense sometimes. Like, if you look at price action, I don't fully I mean, there is a market sentiment, like, you know, but it's the way the price is delivered is what I'm saying. Like, yeah, there's buyers and sellers, but you know, it's the way price is delivered is what the algorithm is. It's why does it respect these levels so perfectly? That's what I think what trips me out the most. Why is the 0.79 such an optimal entry area? Is it because as soon as price gets there, sellers just step in and start selling, or buyers just start buying right at the tick? No, that doesn't make sense to me. There's some sort of algorithm that controls the price action, even though that there are buyers and sellers that buy and sell equities and securities like stocks and stuff like that, which ultimately does affect the NASDAQ because of all the stocks that are, all the companies that are in the NASDAQ. But the way price is delivered is very algorithmic, for sure. I'll give it that. Because I don't think buyers and sellers know, like, if you're buying a stock, you're not going to know if it's in a fair value gap. And then, oh, it's in the FEG, I'm going to sell my stock. Dump. No, it's not like that. So anyways, not to get off topic, but honestly, what's crazy is I didn't even get into the backtesting session yet. That was just my little trading day review of the day, for real. Alright, so this is a new channel, right? And obviously I'm like I'm just starting to post, right? Let me know what y'all want to know, because I can go over rejection blocks, I can go over changing the state of deliveries. Obviously I'm gonna cover those topics, but I want to know what y'all need help with. I would say I'm a profitable trader, aspiring trader, because honestly, I'm not gonna lie, I started in February. I used to do options, forex, but I didn't fully start trading until I got into futures, which was just this February. That's where I like to mark my benchmark. So this is the daily candle. I've learned a lot within these 5-6 months. So look, there's this thing called the rejection block, as I mentioned earlier. This is a daily. Let me close these because I'm about to go over some sauce, some standard deviation type sauce. All right. Alright, so this wick, daily, this daily wick. Like I said, these wicks can be used as fair value gaps. Mark out this previous day wick, and price bounced right off it. Came up, bounced right off it, right? Obviously, this is hindsight, so I can easily be like, oh yeah, respected the wick. But once you start going into, once you mark that out and you go into these and there was a BPR. So I'm trying to go over how to top tick, right? And obviously I didn't catch this, but this is a form. I'm just trying to show y'all why and how. All right, confluences on how to top tick. All right, so obviously you just see me mark out the daily rejection block for this previous day wick, and then I drop down to the 5-minute. And yes, this was the market open. And then I know people are like, oh, why don't you use the 15-minute time frame and all this other stuff. So you just want to mark out PD arrays. That's what I do. This is a BPR. Fair value gap gets inverted by a bearish fair value gap. That's a BPR. So heavy rejection. I didn't even tap this 5-minute rejection block really. But we're in a daily rejection block technically. It just looks different because we're in a 15, 5-minute, 1-minute, blah blah. When you go to the 1-minute, what other confluences are there? Alright, inverted fair value gap here, and sometimes I'll make these like different colors just to kind of, like this, the line. I want to do the shape. And then I'll even title it IFVG, whatever. Because there's always different PD arrays. This was, I think this was the 15-minute IFVG, or no, BPR. Right, and this is what you want to do before the market opens, obviously. I'm just doing this prior because I missed it. But now that I'm looking, it's like, oh, okay, noted. This is why it's like more of like a back testing vibe. And then this is the rejection block. So we have a lot of bearish confluences so far. And obviously you want to mark these highs. How do you clone? Mark these highs. And this is all 1 minute. So look. Where was alright. Alright, so not that these are confluences on like, oh, let me top tick because there's all this stuff up here, right? No. Let me open this up and go to the London sesh. I have this indicator that shows me just the sessions of, this also helps too, by the way. I forgot to mention, we swept, this was market open, we swept London, so this is what I usually mark out too. This is London highs, which is another added confluence. Once you want to get a rejection after sweeping some liquidity like that, because it didn't sweep these highs, which was previous day high. Was it? Yeah, this was previous day high. Didn't fully get all the way up there. It was FEG. We're in a daily rejection block, and it's really only a rejection block because we rejected it. But this was a 15-minute BPR. So now we're just doing different time frame PD arrays, right? I would kind of just go more off of, did we close inside the BPR? Somewhat. Not necessarily a top tick. My phone going on. Hold on, let me see. Alright. Anyways, we locked in right now. Alright, so we swept London highs. Where was I? Oh, okay, the reason why I did this, because I wanted to go over a standard deviation that is on the 5-minute. And this is something I want to kind of touch on, because this is something I'm still learning, by the way. So, let me go to the fib, because not only is this an OTE fib, but this is a standard deviation fib. You feel me? So, which one was it? I think it was this one. That was like the base of these candles. Because what you want to do is look at the fib for these failed bearish swings, where it lines up with these standard deviations. So it's something I'm still studying, and but this leg here, boom, this level, you can put like sell limits or buy limits here at these standard deviations, and that's literally how you would top tick. And at least it's really an added confluence, is how I look at it, because price really moves off these levels. These are projections, these are probabilities of price getting to these levels. So when you're marking out standard deviations, it's a little different than how you just mark out OTEs, because let's say if you go here to here, this didn't even touch OTE. This did, but look, there's nothing here. It's not like a solid base. Like, this is not a good example, because price isn't gonna just bull rush. It can. It's not just gonna bull run up here, but that's not like a bottom tick or a top tick. So it was a -2. I believe it was, because you mark it out different. You have to use the manipulation leg of London. I think it was something like this. Yeah, I think it was something like this. The failed swing, this was a failed swing, because look, right at -2 is where it ticks. Let's try to use another example, and you want to base it off the previous, like, London Alright, I use London to set. This was a crazy rally actually, oh my goodness. Oh my goodness. How do you even anchor that? Do you anchor it from Asian high to Asian low to London high? Like, goodness. No. This is why it's a backtesting sedge, guys. The manipulation leg. Let me see. Oh, okay. That's the manipulation leg. Cause is it the London high to the London low? Kind actually. Hey, there we go. It lines up with the -2. So point is, these standard deviations is something you want to look at to see how high price can go, and not just aim for those targets, but use them as reversal targets. Because usually when price gets to these zones is when price reverses in these zones. So you can literally set a sell limit here and then boom, super top tick, top of the market type shit. That's what I'm trying to focus on. This was just consolidation chop, but for backtesting purposes, no, it's not just the high and the low. How would you mark this out to the -2? Because this is obviously something you can't do. You can't just guess where to anchor your fib, because sometimes it's not always going to work. Which is why I'm going to unlock that strategy and upload it onto the tube. Pause. I don't even sound right. Alright, let's see if we can bottom tick this. I don't know why I want to anchor this. That's a no-go. That's a no-go. Super no-go. I just know from what I know. It's like some last leg. Oh. Okay. This is bearish. Standard deviation. Well, it's a bottom tick. So it's like, let's say you were to, like, in this range, you want to focus on this range. We're learning as we go, people. Highlight that. You want to highlight this standard deviation. And from this swing high to the base of this leg, boom, okay, type shit. And it's usually the London session prior. It's like, you know, the best way to anchor it. So let's, what the fuck was this? New York? Bruh, this was Friday. This is why I don't really trade Friday. I do, but I expect this type of shit, which is why I don't like to do it. Measuring. I just want to see what the fuck kind of range. This is a tiny range. 58-point range for the day is crazy. Chop too, just a choppy 58-point range is crazy. And then we just gap up on Sunday and just fucking take, you know? That's crazy. This was Sunday. And then Asia open. Let's see if we can standard deviate that though. Ooh. Almost. That's almost there. But you're not catching that on a Sunday, man. You're like chilling with the family. Like, you don't want to be doing this on a Friday. And context, people. Context. but I would always usually use the London for sure. The London leg. This had to be news related. I think this one we just broke all-time highs. Had to. Ooh, my battery going low. I gotta charge it. I'm back. I had to put my charger on the I had to charge my laptop. Alright, so we're just going over some standard deviations a little bit. Yeah, you're not standard deviating all-time highs. Let's see if we can top tick all-time highs though. Where were we? I think this was right. No, it wasn't that one. Because without standard deviations, you can top tick by using rejection blocks. So even though we couldn't standard deviate that, and I'm gonna lock in on that, and I'm gonna show y'all how to do that soon, gang. Alright, we zooming into the 1 minute. Zooming into the 1 minute. How would we top tick this rejection block? What did we do? We respected the consequent encroachment of this wick, and you can almost say we respected this one, because it's hard to tell. That's one thing about this strategy. Even Powell talks about it. Technically, we respected this rejection block. And this one was actually like a decent little trade right here. Cause y'all, even though it's in hindsight, you want to think realistically too, right? Like, okay, cause you gotta time the top. Technically, is what you're doing. This I wouldn't take. It's too soon. There's a lot of context you gotta keep in mind. What time is this? This was technically market open. 6:30. Boom, straight up wick. You're not gonna just top tick this wick like that. There's gotta be some context. To me, it's too early. We're waiting for manipulation. We never closed below this fair value gap. 1 minute fair value gap at that. Price was bullish. Consolidated. Boom. Oh, first pump up wick. Oh, and like I said, the main thing, if you wanted to top tick this, look at this candle. It's bullish. Even though it's white, this is a green candle because it's going up. All these clear white candles are going up. Like I said, when you're retesting these wicks, the following candle that is going up to retest it, this would have to be bearish. This is actually pretty bullish. Close is super bullish. This is a bullish candle. And then it doesn't fully close, so this is not a good top tick. And honestly, I wouldn't even be trying to top tick all-time highs. Like, it's kind of risky because it's too, every single candle can be, it's too hard to like do. So, but if we did, it's like, okay, I would just wait for confirmation right here. So okay, what I would do in this case scenario, all right, let's start actually like back testing. I know we're like an hour and some change in this thing, but look, okay, I would wait for a change in state of delivery. If like, you know, top ticking isn't an everyday thing. You can, I know people that I follow, they fucking top tick damn near every day. It just depends. It's a certain mindset in trading that it takes to top tick. It takes, like I said, standard deviation. Things have to align for top ticking still. You can't just like, rejection blocks are cool, but I'm the type, I like waiting for confirmation, if you haven't noticed already. So okay, let's say I'm watching this. It's like 8:40 in the morning. We're already 2 hours into the market, probably exhausted, waiting to see when price is gonna reverse. This is one. This is one sign that we're reversing. Inverse fair value. Yeah. Let me close this. Well, I'm gonna leave this open for now. The rejection block, because we might retest it. So we inverse. We close below. Let's say we took that. I wouldn't take this technically off that. It's too soon. But let's say we do. Let's say with 1NQ. Let's say we just enter this IFEG for backtesting purposes. Okay, I don't like that reaction at all. That one either. I like that one. Because technically, if I were to draw this out, my let's say I entered that IFEG. That high would be my stop loss. So yeah, I wouldn't like this candle. It kind of invalidates the play a little bit because we technically closed above it, so it almost invalidates the IFEG. So you don't want that. But we haven't hit the stop loss yet. So we're still in bearish territory technically, but we're still in this all-time high chop. This is all-time high is hard to trade, bro, because price is in the discovery mode. It doesn't know where it wants to go. So just because you see an IFEG, okay, boom, I'm entering. So I'm just showing as an example, right? So boom, what I would wait for is a change in state delivery personally, but the IFEG play is playing out. So this is this is my CISD that I'm waiting for price to close below. I wouldn't even be in this trade yet. I'm just showing for IFEG fans and people that like trading IFEGs. But boom. Now there's people that would automatically jump into this from the change of state delivery. As soon as we close below this bullish leg right here, is a sign of that we're gonna start reversing. This to me is a better confirmation. This is already confirmation, but it's a little riskier. Not saying this is still risky, but it depends on the context behind it. We are at all-time highs. Is that okay? Some people would just automatically jump in at this close. I wouldn't necessarily do that. I know people that do. I like to see. Let me just close that out. All right, obviously for backtesting purposes. Let's say we're just going with the change in the state delivery model. So we have IFEG, right? When you close below IFEG and then there's a change in state delivery, usually price likes to retest that IFEG and then continue lower. So let's just see how that plays out. Kind of like that. I'm not gonna lie, I would probably jump in on this retest of the change in state delivery. That rejection, let's say I entered right here, because honestly I would usually enter there. So boom, that's horrible. But that means obviously like this is a higher stop loss. Honestly, I would have my stop above this little area, because if price goes above this, it invalidates the play. We have because like I said, price is still probably wanting to tap the IFEG to retest. Oh wait, I bought. I'm tripping. I'm like, why am I up right now? I meant to. Oh wait, no. I meant to sell. My bad. I didn't mean to buy. I did not mean to buy at all. So let's go back. That was an accident. I didn't mean to buy. Let's say I sold. I'm gonna still sell right where I would have technically. Boom, CISD. Now usually you can sit and wait, because there's times where price will just literally continue to dump. This is why people just enter right here, because I've gotten left behind waiting for a retest of certain things. If price doesn't retest, sometimes you just jump in. Like, I hate to chase, but there's times where you got to. So that rejection, I would have been looking to get in, but let's say I would have probably, let's say I would have, okay, boom. I don't like that because we formed a FEG and then closed above it. But we still have this IFEG. If it gets past this, it invalidates the trade. Because the trade is still there. Also, this is where I start using my OTE. Boom, OTE. Look at where price is rejecting. I like that. Let's say I enter here, because technically it's already about, like, right where the IFEG is where the OTE is, right? So let's say boom, I'm in. Let's see what happens. And honestly, let's do the whole 9, right? Let's make this like an actual trade. I would put my SL like right there, risking 250. Let's go for lower lows. Let's go for these lows. Fuck it, these lows. Look, and that's where the standard deviation is for that OTE, right? I like that. I'm here for that. That's $1,000 play with just one mini, right? Let's see how it plays out. Because I know we're trading in hindsight, but I kind of forgot the result of like each candle, right? So let's just see. Okay. Okay, we're chopping. Okay. Ooh, scary. We're still good though. Let's bring this down. All right, I'm gonna close this seek and destroy indicator because we understand that this is New York session now. I only use that to mark out my London highs and lows and stuff like that, and then I just turn it off. All right, we're in drawdown, and also this is the thing about back testing is you can't set sell limits. So let's say I would have wanted to set a sell limit, and let's say I got tapped in right here. We would be at like my entry, right? But we're still respecting this OTE range, right? From this leg up here, ooh, we tapped it really nice. This would actually be a really good entry, and we're testing this IFEG. So I would expect to see price kind of reject this area. Love that candle. This would have been a perfect entry because I don't like being in drawdown. Not the biggest fan. Like I said, hey, this is all-time highs. Price action is a little wonky. So let's see if we go from this high to this low. All right, let's see what happens. Because price is testing that IFEG right now, but the play is still in motion. Even though $60. Listen, $60 in drawdown with a mini is not a bad drawdown at all. You're still in good profit. Like, you're still not in good profit, but you're still in good hands. You're still in good shape. I want to see what's it called? A displacement candle. I want to see a bearish candle. I like this rejection though that we're getting from that IFEG. Right? Okay. Making lower lows. Okay. We're getting there's the displacement. There's the displacement. Like I said, this was the CISD. Oh, what am I doing? What am I doing? Alright. To the left. Alright, so that was the CISD. We went up. We're respecting this OTE range this whole time. So this would have been a decent, and this was the PD array right there. So this is one way I would use the OTE for like a safety net. That's how I look at like the OTE is like if price goes above this, like if this closed bullish above this, I would start kind of getting out. And but look, we haven't really we're in a little drawdown. This is why you don't just hop into things, you wait for confirmation. But it gives you what the CISD does, it gives you like an idea that price is more likely to start going down, and in that indication, price should start respecting bearish PD arrays, and IFEG retest and respecting that, pushing downwards from that, is a good sign of bearish PD arrays being respected. So let's see what happens. We're still in this trade. Still in this trade. Oh, this is another one too, by the way. This is another form. So look, this is a bearish PD array right here. So let's just start marking shit out, right? This is a fair value gap, bearish fair value gap, right? Let me what did I mark this? Oh, what did I mark that for? Let's just close that because it's kind of in the way. All right, bearish fair value gap. But what I also do is look, OTE works on bearish engulfing candles too. This is how, literally, this is how I use the OTE. Look how it went up and closed right at 0.79. All right, I'm expecting a bearish candle next, a rejection next. That OTE zone is pretty strong for some reason. I don't know. Obviously, like I said, this is a bearish fair value gap, but the OTE, it just gives you added like confirmation. Like I said, it's a safety net, because if price closed bullish right here, I would have just started like not feeling too good about the trade. I would have still waited for it, but honestly, like if it would have started doing this, I'm gonna manually close it out. Like, yeah, this is what I see stop losses as is like if there's just some random spike up and like all this like, but you can close. I mean, people say wait till it hits your stop loss, but sometimes you could just tell the way price is moving that it's just disrespecting your whole plan and it's just time to close out. But we're still good. All right, so let's see what happens. We should start dumping. Let's go. Now we're moving, right? I'm breaking this thing down play by play, like candle for candle. Alright, I'm about to pause it real quick. So I'm breaking this thing down candle for candle, right? We start moving a little faster. I do not like this. Man, this PA was crazy, but look, we're Gucci. We're looking good. And we drew another bearish FEG here, so this should be respected. Oof, I would not like that at all. But we're still in the play. Almost TP. Okay, see, this is where I would probably have one of my TPs. If I had multiple contracts, I would start, because of that standard deviation, even though it's ooh, TP hit. TP hit, man. Let me close this out. The TP was hit, gang. How many points was that? Was that 47 points? Not too bad, not too shabby. We did close these lows, sweep these lows. I mean, and got an instant wick back up. That is a CISD play for you folks. And also, I like to point out these OTE zones. Boom. So you you have multiple times to get in here, right? Because you could have got in right there, boom, dump, right? Almost hit the -2. Right here, like I said, this candle to me off that FEG, that's a little sniper entry right there too, especially after we already got this change in the state, right? Because like I said, after the change in the state, price does like to go up to retest certain PE rates, but there's times where it just clearly dumps. And but this was a good trade peoples. And let's see how the rest of the day played out after that. Went back up. Watch this though, actually it was crazy. Let me see. Okay, so you see this over here, right? This little engulfing, price didn't even tap that. But what I would do, I would get my OTE fib and anchor it from that low to this high. And price bounced from that zone. I'm not saying I would enter and set this up, because I usually like this 0.79. Let's see how that plays out. We just chopped for the day after that, because yeah, look, I think market closed. Yeah, market closed. What day was this? Did market close early? Because look how it jumped from 10 to 3 p.m. What day was this? July 3rd? Thursday? Because then look, Friday, I don't even think, yeah, we closed. Oh, well, duh, I don't back testing, so. But that was what, that was $1,000 trade, real quick. Nice little back test right there. Let's go to the 5-minute. Let me keep playing this out, because I do feel like if I set a buy limit here, price is gonna respect this OTE, I believe. But we'll see. Watch. Let me drag this out a little more. Look at that. So let's say, all right. Actually, let's buy this. Let's just see what happens if we buy this. This is a good area to buy. Let's say I had a sell limit there. Let's buy 2 contracts. Let's up it up a little bit. Let's see what happens with this. The thing is, I think these are all-time highs. I don't think we make new highs with this, so I'm not 100% certain about this play. But let's say our stops are below this 5-minute fair value gap, right? This, I would say this. Let's say I bought this, right? Let's see what happens. Right, yeah. Below this low. Whoa! I forgot I got 2 contracts up. Ideally, I would not even set. I wouldn't even set. I ain't gonna lie. I would not even set a stop loss here. I would keep a mental stop loss, because yeah, that's kind of crazy. Don't like that. That's why you want to wait for confirmation sometimes. Only down 90 bucks. Oh, you know what? I think we're gonna dump further. I could tell, cause yeah, I like to anchor it off the Fed. That doesn't mean it's gonna respect it. It can respect this bullish one, which is probably gonna happen. Watch, but let's just keep it here for backtesting purposes. But I do think we're gonna disrespect this OTE zone. Even though we're getting a good reaction. God. Hold up. Oh yeah, we're out of there. Okay. So let's say we closed out right there. Negative 590. We don't even care what happens next after that because our play is low-key invalidated after that. What time is this? Oh, this is Asia session. It's like 8 a.m. I mean 8 p.m. Let me put, see, that's what I do, like, yeah, this, I wouldn't even be trading this. That's crazy. Nah, that makes sense. Oh wait, see, it did respect from this engulfing, ended up respecting this one. So let's see how that plays out. Not gonna answer that one, just back testing purposes. Okay, still dropped down. Still kind of respecting this zone. Let's just put a line right here so we know where it's at. It's the OTE zone. Ooh, London came through and disrespected it, right? So because of this super high volume, because usually price would pump and do stuff, but since, all right, let's look at the lowest low. Let's say this is the lowest low of the leg, could be this one. Because see how there's like a bearish, and you know, and this is why, I mean, for one, I don't trade Asia and London. I wouldn't even be trying to do this right now. But look how from this base of the leg, from this leg to that swing high, price did bounce off that. So let's say we did take that. No sir, no sir. From this whole swing point, all right, that's where we're at now. This is, all right, let's see. Let's say right here, boom. Let's say we enter right here with 2. Let's say we feeling a little, like I said, this is all-time high, so if anything, I am mentally low-key bearish. Letting price kind of discovery prices. So these aren't really great examples, to be honest. But let's see how this plays out. Oof. OTE is not working right now. But are we still holding? Because now New York session's about to open. Look at, see, price is still, we just jumped in too early. But let's say we got in right here. I'm still bearish because so I wouldn't, I'm like I said, I'm not even 100% with these entries, but look, price is fluctuating in this zone. Chop. Oh, was this the, oh, that was a weak chop. Market closed. Look what happened. So from that New York low to the New York high, this OTE did technically get respected, not in the prettiest way, because obviously I'm not, this isn't even like my trade, I'm just like seeing how price reacts to this area. But I wouldn't be holding all this. For one, this is 4-3 in the morning on a Friday.